And with this week's market sell-off, we wanted to look at a couple places where investors could possibly find some shelter. Sharon Epperson joined us now to break down the safety trade. Sharon.
Well, you know, Melissa, for many investors, building cash reserves is really top of mind. I've talked to several financial planners, including members of the CNBC Financial Advisor Council, about safe havens where people should put money now. And here's some of the recommendations. Money market funds are an important mix in retirement and investment accounts if you plan to retire in the next 5 years. Top money market funds from JP Morgan, Invesco, and Schwab are currently yielding 4% or more. Adding cash to high-yield savings account for emergencies, as well as a buffer to help you cover high everyday expenses due to tariffs, that's another strategy. The national average savings account right now is less than 5%, is less than 1% for a yield there, but top yields at some online banks like Basque and Synchrony are 4% or more. Now, to increase your emergency reserve, another consideration may be to open a home equity line of credit at a bank or credit union. You generally don't pay anything if you don't use it. But the peace of mind of having extra access to extra cash is priceless. For more strategies, subscribe to my Money 101 newsletter series. There are strategies there about navigating these uncertain times. You can scan the QR code there or go to cnbc.com/money101.
Boy, do we need that right now. Sharon, in terms of the money market accounts at 4% versus some of these online savings accounts that are 4%, what are the pros and cons of, is there a difference to holding either?
Well, the money market funds for your investment accounts, you know, are mutual funds. And so there is not the same FDIC insurance that you would get from a bank savings account, even an online bank savings account. So that's something to consider. But people want to make sure that they can sleep at night. So a lot of folks may be moving some of their money into money market funds within a 401k or within their investment portfolio. And in fact, over the last several weeks, we have seen people who normally are, you know, set it and forget it with their 401ks, moving some of that money from equities to fixed income and to money markets.
We were just talking about the precipitous drop in rates in just the past week, Sharon. So if you're on the fence, you're looking at opening a CD, a high yield CD. Do it now.
Yeah, do it now. Absolutely do it now, because you want to lock in that rate for wave of 6 months or a year. And if you don't need that money during that period of time, it absolutely makes sense. I mean, as you're looking at what the major average is, how much they've fallen in a day, and know that you could actually make that money for your money just sitting there, it's kind of a great push to make sure that you're putting your money in savings in those CDs, or building a CD ladder or something like that.
And there are no penalty CDs too.
Yes, exactly.